Hello students, and welcome to our very first video on the conceptual framework. I would like for us to start by a quote by one of my favorite animated characters of all times. Winnie the Pooh said, "Always remember you are braver than you believe, stronger than you seem, and smarter than you think." Something for you to always remember. So our learning outcomes for today is that you need to be able to discuss in detail why any named accounting item is an asset, an income, an expense, or a liability. And in doing this, you need to refer to the conceptual framework. So I want to start an introduction by saying that I know accounting students, and we are often lazy to study theory, but the following theory must be studied off by heart. Then you can score a lot of marks in these discussion type questions. So now we need to start by saying, but what is the conceptual framework all about? So we all know in accounting we have 5 elements. We have assets, liabilities, income, expenses, and equity. And up till now we've always learned that, for example, a vehicle is an asset. And we know a vehicle is an asset and bank is an asset. But the conceptual framework goes a bit further, and it asks, but why are certain elements assets? So the conceptual framework explains why a certain item is categorized to be a specific accounting element. For example, why sales must be an income. And for the conceptual framework, we focus on 2 important factors. There's a definition for each element, and there's a recognition criteria for the element. And when we do these discussions, there's a specific way in which the discussion must be done for us to score marks. So we need to name and interpret the definition first of all, then we need to name and interpret the recognition criteria, and then we need to write a conclusion. So you need to state whether your discussion complies with the definition and the recognition criteria, and whether it is an asset or a liability or an income or an expense. So I know that students often struggle with this. So what I've done is I've created an example here for you as to how you should answer these types of questions. So we start with an asset, and an asset has a definition, and then I want to show you how to interpret this definition. So all my interpretations here are positive. They are not always specifically positive in all the discussions that you'll do, but at least you will have an idea of how to approach this type of question. So it says, an asset is a resource controlled by the entity due to past events, and it leads to an inflow of future economic benefits. So if you name the definition, you ought to get half a mark, half a mark, half a mark, half a mark normally. But then most of the marks will be with the interpretation. So you need to say yes, the asset, and you name the asset. For example, if the question talked about a vehicle, you need to say the vehicle enables the entity to carry its business successfully. But then you also need to describe how this asset is used, because the way it is used will answer the question as to whether it is a resource or not. So you need to say, for example, it is an asset and it enables the entity to carry its business because it's a delivery vehicle, and it helps them to deliver inventory to customers, or whatever the scenario may be. Then controlled by the entity. Here you need to focus on the word controlled. So how does the entity control this asset? So you can say yes, the entity owns the asset, and they may use it, store it, or trade it as they wish. So that shows control. Then due to past events. Here you need to indicate the specific past event. So you can say at some date that the asset was obtained, or there may also be a contract. So if you purchased it, for example, on credit, there might be a contract, and then you can refer to the date on which the contract was signed. Then, lastly, it leads to an inflow of future economic benefits. So here you need to describe how the entity will earn money, because economic benefits refer to money. So you need to say the entity will earn money when the asset is used to what? Now you need to describe how the asset is used. How will the asset generate money for this entity? Then you need to also look at the recognition criteria. So recognition criteria of all elements are very similar, but you need to know which one goes where. So the recognition criteria for an asset says that the cost can be measured reliably and it is probable that economic benefits will flow to the entity. So the cost can be measured reliably. Here you need to indicate the cost price of the asset or the value at which the asset was obtained. And then it is probable that economic benefits will flow. Again, you need to also link this to the definition and describe how the entity will earn money when the asset is used and how the asset is used. So that's a small example of how an asset should be discussed. Then we also have a liability. So a liability now has its own definition that you again should know off by heart. It says it's a present obligation arising from past events and the settlement will lead to an outflow of economic benefits. So we start with the discussion or the interpretation of present obligation. And present means that currently you owe or the entity owes someone. So you need to say, yes, the entity currently owes this amount, and I've just made up 1,000 rand there, but it currently owes this to this and this party. So it's a current obligation. You have that amount owing now in the present. Then also arising from past events, again you need to talk about when did the obligation arise. So the past event can be when you obtained the loan, or when you obtained an asset on credit, or when you entered into, I said here, contract A, or whatever contract. So there should be some kind of past event that caused this obligation to exist. And then the settlement will lead to an outflow of economic benefits. So now you need to discuss how money will flow from the entity. Yes, we owe this and this amount must be paid to this party. So how will money flow from the entity? Then we also have a recognition criteria for a liability. So we'll start with the recognition criteria and say the cost can be measured reliably and it is probable that economic benefits will flow from the entity. So here we must say, yes, this is the value of the loan or the creditor or whatever liability we have, and it is probable that economic benefits will flow from the entity, which means that payments must be made. So here you can indicate a payment must be made on the last day of the month or on whatever date to which party to show that your money will decrease. Our next element under discussion is a expense. So an expense also has its own definition, and it says it's a decrease in economic benefits during a financial period in the form decrease in assets or increase in liabilities which lead to a decrease in equity. And then there's also a last part that you can't see, there we go, other than withdrawals by equity participants. So now we have the definition. Again, we need to do an interpretation of this definition. So we need to say there is a decrease in economic benefits. Economic benefits will decrease by this and this rand, and you can also indicate to whom it must be paid. For example, if it's water and electricity, it costs 1,000 rand and it is paid to the municipality. During the financial period, you need to name the period. For example, for the year ending February 2010. Sometimes questions will not provide the financial period, but then you must indicate in your interpretation that the financial period was not provided. Then in the form decrease in assets or increase in liabilities. So here you need to describe the decreases and the increase. For example, the bank is decreased with this amount, or the creditor is increased with that amount, to show which type of accounts will be affected and which increase and which decreases. So here you need to know your double entries. Then which leads to a decrease in equity. So here you need to describe the equity decrease. So you need to say that the decrease in the bank causes a decrease in equity, or the increase in the creditor will cause a decrease in equity. But you need to again explain why there will be a decrease in equity. And then the last one, other than withdrawals by equity participants, normally you don't need any explanations there, but you need to remember to state this part so that you can get a half a mark there. Then we also have a recognition criteria for an expense. It says it is probable that that there will be a decrease in economic benefits, and the decrease in economic benefits can be measured reliably. So again, you need to say, yes, payment is made to this and this party, and the decrease in economic benefits is measured reliably. So here you need a value, a number for the outflow. Then income is also very similar to your expense definition, but it's obviously now the contrary. So for income, we say It's an increase in economic benefits during a financial period in the form increase in assets or decrease in liabilities, which leads to an increase in equity other than contributions by equity participants. Again, we need to do our interpretation. So economic benefits increase by what value and during which period? Again, I've used 28 February 2010. You need to name the period or state that the period was not indicated. Then here you need to describe again the decreases and the increases. So bank and debtor will increase or the creditor will decrease with this amount. So describe the change there, which is basically the double entry. And then you need to also again describe the increase in equity. So describe equity increases, like an increase in debtors causes an increase in equity, or a decrease in creditor causes an increase in equity. And then lastly, other than contributions by equity participants, again, no explanation needed, but you need to remember to state that criteria. Then our income will also have a recognition criteria, which says it is probable that economic benefits will flow to the entity, and the increase in economic benefits can be measured reliably. So again, payment is received now from some party, which you need to indicate, and then also the value of this inflow in rand. So that was our video, our first video for our elements and our framework. I will see you in class where we're going to do a question bank so that you can see how these discussion questions are often asked in tests or in exams, just for you to see how you should prepare for those. So I will see you in class. Thank you very much for watching the video.